The market feels balanced and poised for a strong spring season. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, February 2nd. We know that selling and buying a home can be stressful and often very confusing. We do these weekly videos so you can know how the market is affecting you as a homeowner who's thinking about selling or someone looking for a house that you would love to call home. Let's start off by seeing how the market performed this week. There are 16 active homes on the market, which is up from the 10 we had last week. The average asking price for those homes is $1,766,000, down slightly from last week's average asking of $1,781,000. 2 homes went pending, less than last week's 5, but the pending price is $1,619,000, which is up from last week's $1,492,000. And only 2 homes sold this week, which is down from 4 that we had last week, and a lower average sales price of $1,735,000, down from the high average of $2,316,000 we had last week. So now that we know how the market performed this past week, we can look at the broader trends that provide insight into the market's overall health and potential future direction. But before we do that, if you find this information helpful, you can subscribe so you don't miss out on any future updates. And might as well share it with a friend as well. Everyone deserves to be in the know about their local real estate market. All right, let's take a look at those indicators, shall we? Inventory increased to 16 homes this week. While an increase in inventory might usually be considered a softening of the market with normal inventory levels, I don't think the same is true right now. If our inventory remains this low for too long, that could have negative effect on our market. But if we settle around the 20 homes, then that level of 20 homes, then buyers will at least have a few more options to choose from, and it will keep from them feeling overly discouraged. However, since we did have a significant bump in the number of homes listed this week, we did see the turnover rate take a little bit of a hit. I would expect to see this climb back above 100% by next week, since 2 of the 5 pending homes from last week had over 10 offers. That tells me there are still plenty of serious, interested buyers in our market. So the sudden jump in inventory will likely be absorbed by next week. So just a small downturn that'll return very quickly. The bidding wars on those handful of homes in the recent weeks has continued to push that over-under metric up this week. We now are sitting at about 2% over the asking price for the average sales price on homes in San Ramon. To reiterate, the fact that we are seeing multiple offers and sales prices over asking leads me to believe that we'll see turnover rates increase by next week. Home values continue to climb this week as well. We are now sitting above about 7% above the average sales price of last February. Because the sample size is so low, this average price can have a rapid and drastic swings, but I expect the average to continue to rise for the next few weeks. The Triple Q fund dipped a little from last week during the middle of the week, right there. This dropped by about 1%. This was likely a response to Chairman Powell saying that the Federal Reserve was not quite ready to cut interest rates. The whole stock market had a brief, minor negative reaction to his comments, but the Triple Q ended with the week strong, with just about another 1% increase from last week, continuing the 3-month trend that we have been seeing. Actually, it's over 3 months at this point. Ironically enough, mortgage rates did drop a little despite the Fed comments this week. It dropped 6 basis points from last week, and we're now sitting at 6.63 for the average 30-year mortgage. Everybody seems to believe the rates are going to start dropping this year, but only time will tell. This week gives us more generally good news in our housing market. More inventory that isn't oversaturating the market means more opportunities to buy in our great city while not tanking home values. Interest rates holding steady or slowly decreasing means more buying power for buyers and more reasons for homeowners to consider selling. The stock market took less than encouraging news from the Fed and kept on humming. It seems to be a very balanced and healthy market for both sellers and buyers right now. Thank you for joining me for the weekly update. We hope this information helped you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the bell so you can stay informed on the market and how it's shaping up this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help you every step of the way. Have a safe weekend, and we'll see you next week with a new update.